The Bank of Japan is likely to trim its inflation forecast today and consider changes to its massive stimulus program to make it more sustainable. This, of course, comes in as a very busy week for central banks around the world, and it's going to be BoJ that will be the first to share its conclusions post the two-day policy meet. Now, given the weak inflation outlook, the bank is likely to hold rates but may change its bond yield target, which is now at 0%. In fact, we have Poonam Sahni then, who's joining us for a wrap on all the key central banking meetings this week. Poonam, good morning. I understand there are 5 central banks that are going to meet this week.
In terms of US, again, we're already seeing that US has gone ahead and hiked rates by twice so far. And in fact, there are expectations that we should be seeing more rate hikes in 2018 and 2019. But of course, all eyes would again be in terms of how the entire tax spending as well as the tax cuts and as well as the overall spending in the economy goes ahead and takes shape. In fact, from Bank of Japan, well, they are also this is one economy wherein although we are seeing across the board monetary policy normalization, Bank of Japan is still likely to go ahead with its government purchase program of close to around 80 trillion yen, while their purchases so far have been slightly lower, and they are likely to maintain rates throughout, at least until in the very medium term at least. In fact, the next economy we do have is which is Bank of England. Bank of England is really managing a fairly tricky economy right now. We're already seeing that they're struggling with Brexit, and if at all we do see a disorderly Brexit, they would be again into a crisis fighting situation. There are expectations that they would go ahead and hike the rates at least by 25 pips over the end of 2018. In fact, we're also seeing that they're still fighting against the unemployment and meager wage growth. The next economy, of course, is Brazil, wherein we have already seen that EM currencies have taken a hit on account of the strong US dollar, and Brazilian real, in fact, has depreciated by over 10%, and that has led to the risk of imported inflation. Their interest rates currently are at pretty much all-time low, and there are expectations that they would, in fact, have to go ahead and hike rates going ahead in order to contain the supply side shocks there. So watch out for that. And very own India, of course, there are expectations that we may see a rate hike in on 1st August itself. At least majority of the economists do state that, but it would be a close call for RBI if at all they would be hiking rates in August, or would it be in the next monetary policy. But there are expectations that at least probably we would say one rate hike more from RBI towards the entire FY19 itself. And of course, oil needs to be fairly watched out for. We also need to watch out for the impact in the commentary in terms of the MSP hikes, etc. But yes, oil as well as the MSP hikes would be watched out for. And besides that, we're also seeing that the core CPI inflation has been fairly sticky and a multi-month high at 6.4%. And hence it would be a close call, although the entire economic activity does still need fair amount of policy support, and hence a close call from RBI, at least for the August policy coming in.